Hello there, I'm Andrew Winter, host of Selling Houses Australia, and welcome to part one of Compare the Market's Mortgages Made Simples. This is the first C character. We'll be going over your personal financial habits and your credit score, along with how lenders assess them. Let's get into it. First and foremost, let's look at your long-term spending habits. It sounds obvious, but for the benefit of any first home buyers here, lenders really care about how you are spending your money. When you submit a home loan application, the bank will go through as much as 6 months worth of your bank statements with the finest of fine-tooth combs as they slowly build up a complete and holistic picture of your spending habits. They will look for the uniform spending patterns that are generally indicative of a measured, budget-conscious individual. If they don't see any such patterns, they may be less enthused about the idea of lending you a huge sum of money. It's important to note that they will carry out these bank account forensics regardless of the size of the loan you are applying for. And they will do this regardless of how much money you make. You could apply for a modest home loan while making $1 million a year, and the bank would still do a detailed audit of your finances, so they can be confident that you will be able to meet the repayments on the loan. They are particular like that. But crucially, it's not just how you are spending that matters, it's also what you are spending the money on. Lenders may take a dim view of quote-unquote frivolous spending, such as excessive gambling or large unexplained cash withdrawals, particularly if this kind of behaviour leads to you regularly overdrawing your account or ending up with payment dishonours on your regular direct debits. And as we mentioned, whichever lender you apply with will be looking for as far back as 6 months when assessing your financial habits. So you'll ideally want at least 6 months of good behaviour under your belt to start out. Lenders also want to see that you are meeting the repayments for any existing debt you might have, like a credit card or a car loan. And that reminds me, if you are having trouble meeting the repayments on a loan, or if you think you will have trouble soon due to an impending change to your circumstances, reach out to your lender as soon as possible. Maybe you've been made redundant or have some parental leave in your future. Regardless of the specifics, if your material circumstances change in any significant way, you'll want to let your lender know. It's not a massive deal, and it doesn't even require that much effort on your part, but it makes it so much easier for the lender to understand your ongoing needs and circumstances and tailor the assistance they provide to you accordingly. Right, now on to your credit score. This is a biggie. Not only does your credit score play a major role in telling lenders what kind of borrower you are, but it can affect the selection of home loans you have access to and whether you end up with a home loan at all. So, what is a credit score? It's easiest to think of it as a rating, shorthand for how good or bad you are at responsibly handling your financial commitments. Your credit score is based on your credit report, which is an accurate record of credit-related financial activity over the past few years. When I say credit-related financial activity, I'm talking about things like meeting loan repayments, paying utility and phone bills on time, managing a credit card, that sort of thing. These are all activities you will find recorded in your credit report. And if you are making your repayments on time and managing your credit responsibly, they'll be helping to improve your credit score. But what you'll also find listed in your credit report are any and all applications for credit you've made, along with any late loan repayments or bills that are more than a month overdue. Those will stay on your report for up to 2 years. Your history of making loan repayments and paying bills will also stretch back 2 years, and any existing credit or loans will also stay on your credit report for 2 years after being repaid or otherwise closed. Defaults, court judgments, and any applications for credit or a loan will stay on your credit report for 5 years, and serious credit infringements will hang around for 7 years. Bankruptcies and debt agreements will remain a feature of your credit report for 5 years after they start, or 2 years after they end, whichever comes last. Formally recorded financial hardship will hang around for just a year. Now, a late bill or missed repayment will always be a negative on your credit report. But I mentioned that your credit report will list every time you've applied for credit or a loan in the past. And I want to talk about that for a second, because simply applying for credit is not inherently bad for your credit score. But applying for too much credit, now that could do some damage. If you apply for credit, the provider in question will check your credit score as part of their approvals process. This check is called a hard inquiry, even if it's commonly known as a hit, and it'll go straight onto your credit report whether your application was successful or not. Too many recent hits on your credit report will be an immediate red flag to any lender or credit provider. Checking your own credit score, on the other hand, is known as a soft inquiry and doesn't appear on or affect your credit report. So be mindful of this when weighing up whether it's the right time to apply for a home loan or not. If you suspect you're not a rock-solid applicant just yet, it may be worth holding off for now. Okay, so now let's talk about some concrete ways to set about improving your credit score and getting it home loan ready. This won't necessarily be a fast process. Rome wasn't built in a day, and neither was anyone's credit score. But the good news is that improving your credit score isn't a particularly complex pursuit. Paying your bills on time, responsibly managing a credit card, these sorts of things will go towards improving your credit score slowly but surely. The other thing you'll want to do if you are serious about your credit score is dead simple. Check it, and check it often. Luckily for you, Compare the Market's new home loan comparison tool has a built-in free credit score checker that can retrieve your credit score for you in minutes, and will actually send you an update each month afterwards, showing you if your credit score has changed, and if so, how. It's brilliant. Well, that's the first C done. I'll see you next time for the second C, capacity.